Welcome to Trading Lounge and the gold report for the 9th of October. We'll also cover silver quickly as well. Now, on the monthly chart here, as you may know, I've been viewing this as wave 3 with an ABC for wave 4, and then we're looking for from wave 4 to wave 5 up here. We're looking at a 5-wave impulse structure of 1 and 2 and 3 and 4, and then up for wave 5 here. So I think realistically 2,500 is a nice target area to be considerate of, rather than 4, 5, 10,000 and all this other stuff that's going on around the markets. So yeah, I expect a correction across this level before a push to the upside, just simply the natural flow of events. It is possible in commodities where we see an extension in the 5th wave, and that could certainly take us up to 3,000. So within this particular cycle anyway, and obviously you can see how long it's taken us to do this correction here. So the next, spreading it out here, so we're not going to be going to $5,000 and $10,000 and all that sort of stuff, before Christmas, so forget about that. So one step at a time, let's go in between wave 4 and wave 5 here, or rather wave 2 and wave 3 here. We'll have 5 waves in this structure of 1, 2, 3, 4, 5. We'll go to the weekly chart and just check in on that. So on the weekly chart, I'll come back a bit from this wave 2 here. We've got wave 1 and 2. 5 waves very clearly up here for wave 3 and 4. Wave 2 was rather slow and complicated, so the guideline of alternation would make wave 4 simple and sharp. So coming up here, we've got wave 1 here, 2 here, 3 here, looking for wave 4 here, and then wave 5 to the upside here. Now, the normal pattern that we look for here is a classic trading levels pattern. So that's pretty much the, I'll use this one here. So the arrival, the reaction, so that's the arrival, the reaction. Then we look for the first high above the level. This first high above the level here will be in 5 waves. And then we look for an ABC pattern. So the arrival, the reaction, the first high above the level, ABC pattern, and then the next move to the upside. So of course we can trade this leg up through here. We can also trade parts of this leg here as well. But certainly this is where we want to be here in that space. So another way to view this is my little chart pattern here. There's only 3 patterns that really occur at levels. So if this is the 2000 across here, which I call major trading level 2. So the trading levels are simply the Fibonacci golden mean and golden ratio as used on the price. So 1, 2, 3, 5, 8, 13. Well, we chuck in the power of 10, 20, 30, 50, 80, and so on. So you can see that at TradingLounge.com. But the arrival, the reaction, the first high above the level, the ABC pattern, and then the next move to the upside over here. So at the moment we are obviously in this leg here. So let's go and take a look at that. So from the weekly chart, so from wave 3, 4 and 5 here, let's just go to the daily chart and break that down. Just get this into perspective. Here a little bit. Probably pull that chart up there a bit. So we've had a bit of a trade here, and took percentage at 2000 and took a bit more at the top here. And then we've been looking for the 3-wave correction here. So the arrival, the reaction, and then the first high above the level here. So in this first high above the level here, we're looking for 5 waves in this section here. And that will make the top of this structure here, which will also make what we needed a wave 3 on top of that as well, but that's okay. So at this stage we're looking at this as a an A wave here, and then a triangle for wave B as an A, B, C, D and E wave here, and then 5 waves down for the C wave. So far as I can see, we'll just push up from this point. There is a space I mean, some of this is a little bit messy in this space here. So it's possible that we could have one more low here, and I need to talk about that. But we'll also talk about at what point we can go long and so on. In fact, we're already long in this little leg here, and we've taken part profit. I want to move the stop up into this area, but in a nutshell here, before we go, at 1900 there, if we get the 1900 as support, then it's green light and the next pathway is open at that point. If we make a new low here, then we'll be coming down for this one here. So this is really an alternative count, but it carries weight, so we don't want to make it lesser by too much, but yeah, steady as she goes, and we just need to move on evidence. So let's go in and take a closer look at how I've got to this point here on the 4-hour chart. So it's a 4-hour chart. I'll just squash it all in here for a moment and we'll get our bearings on this. So from wave 3 here, we're looking at this as the A wave here, and then it's possible to look at this as an A, B, C, D, and E here for wave B, and then 5 waves down for wave C here, and then also a 5-wave move up here for wave 1, back to the 61.8% mark here for wave 2, and then we're looking for a move up here. Now, also too, it's possible that in the grey numbering labeling here, we can look at this as, well, an A and a B and a C wave to here for wave B. I don't think it's the case because of the structure within here, but I've got to use it. And then this move down here as wave 1, you can get a wave 1 out of this as an impulse wave. So wave 1 here, 2 here, and wave 3 down to here, wave 4 over here, which is the same as this little one here. But there's a problem with that. And then anyway, wave 5 down to this point, down into the closer to the 1800 area through here. Okay, so that's possible. If you shorted this low here, then that would take us down to the 1850. There would be a bounce at the 1850, but eventually that support would fail. That's the midpoint, and then further down from that point. Having this as wave 4 here overlaps. If this was wave 1 here, then wave 4 is overlapping wave 1, which breaks an Elliott rule. So breaking an Elliott rule at this degree of fractal structure is probably not on the cards, but we have seen that in leverage products as Elliott used the Dow Jones and transports and a few things without leverage to get his concept of Elliott Wave together. So as it stands, wave 3, an A wave, triangle for wave B, and down for wave C here for wave 4, looking at this as wave 1 here, wave 2 here, and hopefully we can see this push up in line with the stock and indices and so on. Let's just have a look at this little area down here now, and we'll just go to the hourly chart for this, and we'll try to figure out at what point rules are broken and so on and so on. So first of all, I'll just talk about our trades here for a moment. So we look to be long at this point. We end up lifting the stop up to this point. We've taken some profit off the table at the 1900 area, and we've got our first high above the level here where the market's pulled back to our 50-60% roughly area here. In terms of the trading levels, this is the midpoint here, 50. So really, let's just get this sorted here. So between 1800 and 1900, you know the Fibonacci numbers, don't you? 1, 2, 3, 5, and then 8. So that's all it is. And it just breaks that 100 points down. These are called sub-levels in here. The 1800 is the minor level, that's a degree higher. Then you got medium levels and then major levels. So it works very well with Elliott Wave. So when we've got number 8 here, the 80 here, we've also got a little thing called group 2, which is 65, 72, and 80. I won't go into that at the moment. And it's just a bit of a skeleton of a whole lot of other numbers that operate on a micro scale, another degree lower at that. But the group 2 here is important. So the market's pulled down to say the 62%, and then the market's rallied to the 62%. And it's in 3 waves here, and then it's moved down here. So it's possible that the market can just move down from this point. But if it takes this previous top out here, which will be the A wave, the B wave, and the C wave, this could also be counted as wave 1 and 2 and 1 and 2, a smaller degree here. If that top is taken out here, then it kind of sets the story up for higher moves at that point. But if you know me and the trading levels a little bit, then you'll know what we're actually looking for here is a tested support on this level here. So we'd want the arrival, the reaction, the first high above the level, and then we'll get some sort of pattern like this. Now I'm going to move this now over here because it's just not that top we want taken out here. It's better if we stay within the same, so we can go here, that top, that first high above the level becomes the reference point. We can also bring it down to the second high, which is the better entry. So we're looking for something like that. So yeah, if this occurs and the market triggers these off here, then we've got a bullish market because we'll be above the 61.8%. We would have support on the closest largest number, the 1900 area here, and we'll be ready to move higher. Now, I don't know if that's going to happen or not. We'll just wait and see. Now, there's a big difference between a trader and an analyst. So as an analyst can say anything, and a trader doesn't have that many options, but a trader has the option of having his trading techniques, his setups, and so on. This is my setup here, and that's at the point that I would go long at here. And all of this here is really just a vibration of the 1900s. Also, if you know the trading levels with group 2 here, when you've got a large number like this, you drop down to group 2, which is the support, and then above that is the resistance, which is group 1. So we're working up from the next level now. So from 1900 to 2000, we've got 1, 2, 3 that make up group 1, then the midpoint, and then group 2, number 8 here. Now, if we get a tested support on top of this, is where group 1 comes in. Every single number here is important for different reasons, but the number 3 here, the 30, the 1930, if that becomes the tested support, then the market's not going to be pulled back to the closest largest number at that point, the 1900. All the traders will be looking at the number 5 here, the 50, the midpoint. 5 is the second strongest number in the market. So a tested support like this here, little pattern like this on the 50, on the 30 here, we'll take it to the 50, and then we'll also see the same sort of pattern sitting on this level, which will take us up to the next level, but we'll be moving up from that point. All we need to do is really, at this stage, take out this, get support here, which would be above the 61.8%, and then the second step up here. Normally what we do with group 1 as well is that we try to get positions at the 1900. We could also get positions under this as well, but it just depends on the setup. And this is not a very good setup because this move here is in 3 waves here. So until that's taken out, that top there, that remains as a corrective pattern that could be down for 1, back for 2, and then move down. So our stop that we've had over here, I've brought it to this point, and now I'm bringing it up to this point here. Now I've got a green line here as well, which means you can go short at that point. That's the point that you'd go short at. Okay, that would be confirming it as bearish at that point. Now, it could be just a trap for young players, including myself, because what could happen is this could be an A wave, a B wave, and a C wave coming into this space and then moving up from that point. Or it can just come down to the 1800 area, as I've mentioned before, because of that other structure there. So it's a bit of a Wild West at that point. So what I'm looking for is tested support on top of the 1900. It's that simple such. Yeah, but what I was going to say before I started rabbiting on, I have to watch myself, is that yes, even though that high there is technically sort of important and so on and so on, but what we try to do is we try to build the trade in to get a few positions at the beginning of the trend, or we always want to get in at the beginning of the trend, don't we? But it's always a bit scary to do that. But when you know a few little things like tested support on top of the 1900, we can get a position here, we can get one on the 10, we can get one on the 20. As a tested support, we'll be looking for these patterns here, and then one on top of the 30 here. And if you want to, you can also build on top of the 50 here. We don't want to build in on here because what's going to happen at the 2000 here, we're also going to have a correction here as well. And the same thing will apply. So from group 1 to group 2 here, that's going to be the swing range for this market. So until we get a tested support on top of major trading level 2 here, we don't want to do anything. We just want to build into this position here. Yes, you can take some profit at this point here. Not such a bad idea, and then move back in again. It doesn't matter what you do, as long as you know what you're doing. So that's that in a way. So what I'm going to do now is I'm just going to go back to the 4-hour chart and recap what I've just mentioned. Wave 3, an A, triangle for B, and down for C for wave 4. We do have a 5-wave structure here. It has pulled back to the 61.8%. We need that top taken out here, that little ABC pattern here to be taken out. That would be helpful, but it doesn't conclude anything. Support, tested support on top of the 1900 is our trigger, and we don't need this other one in here that's going to move that. I'll clean that up later. I'm going to move that green line here because we talked about it on the hourly chart. To see if I can grab it here. That's the one we want. Just get rid of that. Yeah, and on the bearish side, we can look at wave B being in place here with wave 1, wave 2 here, wave 3 here, wave 4 here, overlap on the structure here, not so crash hot, and down to wave 5 here. And then we can push up from that point. Just trying to think of anything else. There is a couple of other things, but we'll worry about those. We don't need to worry about those just yet. So that's the basic picture there. So if we could take that idea, or I just want to hang on a second. I do want to have a look at some ETFs here. I've just got to find this other charting program. So this is a daily chart for GDX. We're going to have a look at GLD as well. This is a daily chart here, and this is really quite interesting here because you see how high this has gone in this one here. So in this case, we can look at it as an A, B, C, D, and E in here for the B wave here. So we could look at it a bit differently as well, but just the fact that it's come up so high here for this, it's taken out that previous high here, where I don't think it's done that on the gold here. You see how all these are lower here? So on the GDX, it's actually higher here. So I think that's really interesting. I want to have a look at GLD, of course. So GLD is more like US spot gold here. So it's got these lower highs coming into play here. This market here is probably, I don't know, I'd have to check, do a fact check, but I think it's 3 times bigger than GDX. So GLD is I don't know, do you have to check, but it's 3 times or bigger than the other ETF. So yeah, so we've got the same pattern here. In this case here, it also looks like we've got a nice 1 and 2 and 3 and 4 and 5. So a nice impulse wave here. This looks impulsive here as well. So this is at the 180 here. So the 80 here is like a minor level, 8, 1, 2, 3, 5, 8. So this is a minor level. So if you're trading this market here, well, if gold breaks out, that's fine, but otherwise you'd want to see this market sitting on the 80 here. In this case here as well, if I counted this here down, well, 5 waves from here is 1 and 2 and 3 and 4 and 5 here, which is possible, but this wave 4 here still overlaps this one here as well. I just really wanted to point out the GDX, really. Anyway, we'll see. So it's everything rests on the 1900 becoming the support. If it doesn't and this low is taken out, well, down we go for another leg. As simple as that. This also brings us over to silver as well here. So it's also the same idea here, in that we can look at wave 3 here, an A wave here, an A, B, C wave here, D and E wave here. But this one here seems to count, you'd have to say this, but the trouble with this C wave here, I don't have 5 waves in here. It's more like an A and a B and a C wave here. So a C wave is normally 5 waves, except in a triangle pattern, and we're in a triangle pattern here. So an A, B, C, D and E wave here parks quite nicely. But I'd have to say, just generally looking at it, it makes down nicely for wave 1 and 2 here. Nice strong third wave here, definitely powerful. And then we could look at it as wave 4 and 5 down here. But otherwise, the other point here is it does appear that we've got a nice 5 wave structure here as well, in terms of 1 and 2 and 3, and probably 4 to here and 5 to that high here. So there's a good case for it to be up for 1 here, back for 2 here, but we really need it to take these highs out and move up a little bit higher in this case. Also to here, the between 2000 a major level and 3000 here, major level. This is a medium level here, which is always halfway between 2 major levels, but it's the same thing again as well. These are minor levels in this case, so 1, 2, 3, 5 and 8 here, and then we've got group 2 in here. I'd be much more comfortable if this was sitting on the support here. I mean, I don't trade this market, so it doesn't really concern me that much, but I think it's part of it as well. But yeah, look, it's exactly the same pattern as gold. I don't understand quite why people say that it's better to buy silver and not gold when they both got the same pattern. We'll be able to look at the range. They've both pulled back pretty much the same. We'll see. We'll see how it floats. I think that's about it, really. That's all I really wanted to say. I'll just go to the hourly chart here just to explore. No, don't have it on the hourly. Just check the 15-minute chart then, see if I've done anything here. Yeah, look, this is off the low here. Don't worry about the labeling too much. I mean, it's fine as 1, 2, 3, 4. 1, 2, 3, 4, 5. ABC for 4 here. This is a bit messy in here, I understand, but 1 and 2 here, and this, yeah, it is a bit messy, isn't it? You can look at that in a couple of different ways. When something's uncertain, then I just need to turn to practicalities. This 2,400 here, if this is 5 waves up here, then we should be making a new high here. This should just move up here. It should just continue to move up, because it's already pulled back to its 50–60% retracement level here for this. So support on 2,400 here, or taking this high out is okay for the long trade on this side. But I mean, if this is going up, well then gold's going up as well. Alrighty, I've rabbited on and waffled on long enough, so I will exit this video. Thanks for tuning in, always appreciated. Cheers.